Hey there, fellow tech enthusiasts. Today, we're diving into the world of digital payments and exploring how a small change, the merchant discount rate, (MDR), could significantly impact the landscape. Get ready for a deep dive into the UPI ecosystem and the potential winners and losers in this evolving game. Let's begin. First things first, what's the big deal about MDR? Well, it's the commission businesses pay to banks for processing digital transactions. Think of it as a small fee that makes the whole digital payment system tick. Now, the interesting part is how this fee is divided. Typically, in a merchant payments ecosystem, issuing banks take the majority of the revenue share from MDR, around 80%. But here's the twist, UPI is different. While the term issuing bank is rooted in card industry parlance, the UPI framework identifies these entities as remitter banks or the customer account holding institutions. So, the remitter bank still gets a large share, but it's more likely to be around 60 to 65%. The real windfall goes to merchant acquirers, like the top 3 UPI apps and payment gateway firms. Now, let's talk about the big 3. PhonePe, Google Pay, and Paytm. These market leaders are poised to benefit the most from MDR. Why? Because they're already dominant in merchant acquisition, and with MDR, they can secure more lucrative revenue-sharing terms with their banking partners. In my opinion, this is a game changer. These apps have already invested heavily in expanding their reach, and MDR will give them an extra boost. For instance, initial estimates suggest that PhonePe and Paytm could earn around 700 rupees crore annually from MDR, while Google Pay could make around 500 rupees crore. That's a significant chunk of change, and it's going straight into their bottom line. But here's the catch. Smaller competitors face a distinct disadvantage. These smaller UPI apps don't have the same sales machinery for merchant acquisition, and as a result, they might see their MDR revenue share fall below their current UPI market share. It's a classic case of the haves and have-nots. The negotiation power of larger apps with partner banks could make it harder for smaller apps to get a fair share, which means they might struggle to offer better incentives and cashbacks to consumers. From my perspective, this raises a deeper question. How can we ensure a level playing field for all players in the digital payments ecosystem? Now, let's zoom out and look at the bigger picture. The entire ecosystem could generate anywhere between 13,500 to 16,000 rupee crore annually from MDR. That's a lot of money, and it's going to be divided among various partners, including bank account issuing banks, beneficiary banks, consumer-side payment service providing (PSP), banks, merchant acquiring payment aggregators, and the National Payments Corporation of India (NPCI). The NPCI gets a fixed fee of around 0.02 BPS per transaction as switching fees. So who stands to gain the most? Well, it's the large banks, with the State Bank of India (SBI) potentially earning up to 3,000 rupees crore in a full financial year, while other top banks like Bank of Baroda and HDFC Bank could make around 800 rupees crore. Union Bank of India, Canara Bank, and Punjab National Bank could also make around 700 rupees crore in a year. But here's the twist. The contours of who gains how much are yet to be determined. The MDR levy is applicable only for merchant transactions, and the variables, like the turnover threshold for businesses and the transaction value, could significantly impact the distribution of revenue. So, while the large banks might be the biggest beneficiaries, the smaller players could still find a way to thrive in this evolving landscape. After all, the digital payment space is all about innovation and adaptability. In conclusion, the introduction of MDR to the UPI ecosystem is a game changer. It's going to shift the power dynamics and create new opportunities for some, while presenting challenges for others. As we move forward, it'll be fascinating to see how the market adapts and how the smaller players find their place in this evolving landscape. So what do you think? Who do you see as the big winners and losers in this game? Let's keep the conversation going in the comments below.